Good afternoon, everyone, and welcome to the Daily Volatility Box Report for October 11th, 2019. We are TOSindicators.com, home of the Volatility Box. For today's trading, we gave back much of our profits on all three of our indice trades in that second trade. We'll cover what actually happened with the news event that came out. But for us, that the actual spike of the news gave us our first entries across the board in the S&P, the Nasdaq, and the Dow, and those entries were winners for us. And then the second trade that set up, which was a reversal of that same move where we tried to fade the other side, was unfortunately a stop out where the markets then made a push higher. And so we gave back a good amount of our profits there. At one point, I think we were up almost $2,300, a little bit more than that. And we ended the day up with just positive 300 in the S&P, zero. So we scratched even minus commissions actually on the Nasdaq. And then on the Dow, we ended positive 175. So we gave back a good chunk of change. And this is just another testament to the crazy Fridays. Depending on when you shut down your screens, you might have saved yourself, or you might have just been happy with the profits. You know, $2,300 plus on a Friday. I think that more than doubled the actual weekly P&L. And so we ended up giving back a good chunk of that, which is frustrating. But for us, we just continue to trade until sort of 10, 11 on Fridays. And so the second trade for us was in that same hour. And so we gave back some of our profits. Of course, I wouldn't be complaining if those trades ended up being winners. And so all of this is just really easy to talk about in hindsight of, stop trading after you had these profits, so on and so forth. So if you also had these losses with us, trust me, we understand the pain, but it's okay. And again, this is one of those games where you're playing the probabilities. We had no idea what would happen. We didn't know we would give back our profits. We did give back our profits, but if those second trades had been winners, trust me, we would not be the ones complaining right now. All right, and so we also had three trades that set up on the 30-year bonds. Two of those three were winners, but unfortunately that first trade that was a loser kept us deeper in the hole on both of our contracts. And so we recovered some of our losses, but we still ended the day negative in the bonds, negative 93.75. And so in total today, we had 9 trades, a total winning rate of 55.5%. For a total P&L of 381.25. So nothing to write home about. Gave back a good chunk of our profits, but still positive, which helped us end the week up on a nice positive note of positive 2366.25. And this is trading 2 lots of the full-size contracts. Again, we've had days that are much bigger than this, and so it is a little bit meager of a P&L, but it's still positive. Second positive week in October, which is nice to see, especially I think after we had that one almost negative week. And so we'll take this and then head into next week's trading to see what kind of activity that brings. All right, moving right along. So for next week on Monday, as of right now on the calendar, we don't really see any key events, at least that pertain to the U.S. markets. And so we'll be using the same plan that we used yesterday, which is using that first hour test of the aggressive volatility box to make the determination of which volatility box to use. All right, and then the final heads up or the final notification, announcement, whatever you want to call it, we released our latest free indicator on Monday, which is called Smarter Earnings. Unlike many of the tools currently available out there, this indicator lets you trade the actual day of earnings. It's available for free. It helped you trade Delta Airlines a few days ago, and I think with earnings season around the corner, this might be a really useful indicator that you might be interested in, and it's free. Available on our website, tosindicators.com/indicators/smarter earnings. All right, now let's get to charts. We'll start with the S&P futures, and we'll start using the same test that we outlined. We said we'd be using the first hour test, and that's what we're going to go ahead and do. And so in that first hour, we checked to see whether or not the S&P breached either side's aggressive volatility box entry lines. We see that we very clearly had, and so at this point, we're now checking to see if we hit what would have been our stop if this was a valid trade, or if we hit what would have been our target first. As we can see, price ended up making a move towards our stop, and that to us, free information and gave us sort of an awareness that the S&P is facing more volatility than usual, and to switch on over to the conservative volatility box. So now, once we switch on over to the conservative volatility box, we had an opportunity to go long in that new spike. And so again, this is why we stress having your orders already parked out there. Sometimes you benefit in the sense of you might get a better price, but sometimes, especially when you have spikes like today, unless you're really, really quick, if you don't have your orders parked, you miss some of these trades. And so these levels were plotted as of 9 a.m. Pacific, as of this candle. And so you had plenty of time where you knew exactly where these levels are plotted to get your orders in. So for us, we already had our orders out there, and we'll talk about actually a point where not having your orders out there was a little bit painful as well on the Nasdaq. But let's focus on the S&P first. So for us, our entry was right here at the entry line. Our stop outside of the volatility box, where we gave it 6 points of room. That 6 points was hit in the very same candle. It was almost one of those instant targets. So that was one of those cha-ching moments. And then our second contract was at the target line, 12 points away, and we ended up hitting both T1 and T2. After we hit T2, this also triggered us into our second trade, and this is where we gave back much of our profits. And so our second trade was an opportunity to go short. Our stop was once again outside of the volatility box, where we gave it 6 points of room, and our first target was the 6 points. We came really close, and this is true across the board. I think we came down to 5.5 or 5.75, and so we were off by 1 or 2 ticks from our target on the S&P before we ended up having this reversal in price. And so that was frustrating to watch. For us, once we put our T1s out there, we don't really adjust that, not even after the second hour. And so it was frustrating to see this be a stop out, but we just follow the rules, right? That's our plan. If you are on that trailing stop methodology, then you did end up still profiting off of this trade if you trailed your stop using the highs of the previous candle. But for us, this was a stop out where we gave back much of our profits. And this will be true across the board. And then we see into the close on Friday, we ended up breaching even the conservative volatility box. Obviously, not looking to enter the market with a few minutes left into the weekend, but this is just interesting information to see that we ended up making this almost 3 standard deviation move to close out the week. All right, now if we head on over to the Dow first, since that's shared more similarities with the S&P. So repeating that same first hour test, we checked to see whether or not we breached either side's aggressive volatility box. We had, and then we checked to see if we hit what would have been our stop before we hit our target. And price had started to make the direction towards what would have been our stop. And so that was then free information, which was our sign to switch on over to the conservative volatility box. And so once we switched on over, very similar to the S&P, our order to go long was filled as price slammed into our aggressive volatility box entry lines. Our stop was outside of the volatility box, where we gave it 50 points of room. First target, 50 points, hit, I think, in that same candle as well. And then the second contract was at 85. And so this gave us both our T1 and our T2, and then we reversed our position. In the case of the Dow, we ended up missing our target by 1 point. So we came all the way down to 49. And this is where, again, it's very easy to say looking back that, oh, you should have moved your target up by 1 point. But for us, we left our orders as is with our 1-to-1 risk to reward. And unfortunately, that did not help us today, where we were stopped out in this wick. And so this is where we gave back our profits on the Dow, 50 points apiece on each contract. All right, now moving to the Nasdaq, and the Nasdaq is the one indice that gave us a sign to continue to use the aggressive volatility box. And so if we repeat that same test using the aggressive volatility box, we see that we didn't get close to breaching either side's volatility box entry lines. And so we continue to use that. And so in the case of the Nasdaq, for example, when this news event came, our order was still parked right here at the cyan entry line. And so we ended up falling fairly deep into our clouds. And the only reason why we survived is because of the little bit of room that we give it outside for this hour, which is we gave it a stop of 20 points, which is typical for this hour. Our first target was also the 20 points, which was actually above the target 2 line. And so as we continued to see price fall fairly deep into our clouds, we moved our T2 line up to, so our T2 was at the same level of our T1, giving us a minimum of a 1-to-1 risk to reward. And after we hit our T2, you saw this. That was then sort of, you saw price action actually unfold. And so you switched on over to the conservative in the Nasdaq as well to join the S&P and the Dow. And then here we had our second opportunity to go short the volatility box. And I really thought that this short would have at least given us our T1, where our stop was outside of the volatility box. But unfortunately, we didn't come close. Well, we came close, but not close enough, where we came 14 points, I believe, away. And our target was at the 20 points, so 6 points away before price reversed. And then we ended up getting stopped out. And so today, trailing your stop would have helped you. Some days it doesn't help you. Some days it does help you. Whatever you choose, you just need to be consistent in that methodology. And finally, let's talk about the trades in the bonds. And so first, for those of you who asked to receive an advanced copy of that trending label, we had that alert pop up today on the bonds using the aggressive volatility box at 5 a.m. Pacific. And so at this point, we had our chart bubble come on, telling us that the bonds were likely trending down for the rest of the day. And it's nice to see that this observation ended up panning out. We didn't act on this information today, but this is really part of that hypothesis that we're testing using the volatility box's information. And this is one of those points where you can say, yes, this did in fact give us a heads up with the aggressive volatility box in the bonds of a potential trending market in the bearish direction. All right, now let's look at how we actually traded the bonds today. And so if we draw that same entry line, so if you're a bit more conservative of a trader, you might have seen this previous hour unfold, and that might have already been your sign to switch on over to the conservative volatility box. For us, we still measured that first hour test, and so the bonds didn't breach either side of the aggressive volatility box. That was our sign to then continue to use the aggressive volatility box to try and play some of the fades. So our entry came as price fell into our aggressive volatility box right here. Our stop was outside of the aggressive volatility box where we gave it 7 points or ticks of room. Our first target was also at the 7 points, which was right up here, and it did not hit in this candle before price started to fall back down. And so we ended up getting stopped out of this trade, which was then our sign to switch on over to the conservative volatility box, thinking that that might capture price action a little bit better, which it did, but here we ended up getting stopped out on 2 contracts, which was a bigger loss than the gains that we had using the conservative volatility box. So our first entry using the conservative box came as price slammed into our conservative volatility box entry lines. Our stop was outside of the volatility box where we gave it 6 ticks of room. We ended up hitting that first target, and then our stop was moved to break even, and we were taken out in this wick down. And so we only got a T1, which was a +6 in that first trade on the bonds. Then we had this news event where we had this crazy tick down, and our order to go short was actually filled on the bonds, where you had an opportunity to go short, and then the stop was outside of the volatility box where you gave it 5 ticks, and you ended up hitting the 5 ticks before price then ended up reversing, and so that second contract was taken off at break even in this move up, but you still got that first target, and so you had a +6 and a +5, but a -7 times 2 for this first loss, which is why the bonds ended on a negative note. All right, so once again, we had a total of 9 trades that set up today for a total winning percentage of 55.5% and a total P&L of positive $381.25 after giving back a good chunk of those profits. That helped us end the week up positive $2,366.25, which, while nothing too outstanding in terms of comparing P&Ls to previous weekly P&Ls, it's still positive, and it still gets us into the second week of October with 2 consecutive green weeks, which is awesome and something that we like to see, especially as volatility box traders. All right, we hope you all have a wonderful weekend. If you have some free time, you may want to use the Smarter Earnings Indicator to try and be prepared for earnings that are taking place next week. I know that's one activity that we'll be doing in order to do our quote-unquote homework and be prepared for the trading activity that we have for the upcoming week. All right, we hope you all have a wonderful weekend. Take care and see you next week.